Additional things we will not work. We will just make sure that whatever we have done, we will go through it. What happens? Is it right? What happens usually? Today, what is the date? Today is 19th.
We will not continue with the consolidation for profit and loss.
No. Don't worry about that. Okay? We will see the same rules are there. Rules are not going to be any different. We have done that much is sufficient. We will do in associates also. We do the same thing. Okay?
Okay.
In associates also we will do the same thing. In disposals, little bit different. We have studied the concepts. Now we will cover this, and subsequently again when we go back for a revision now, then we will see how the things will be done. Here also I have taken only 1, 2 or 3 questions. That's all, not more than that. We don't want to. Is it right? 3 questions I have done. Inshallah we'll do maximum. We'll do 3 inshallah today. Okay. What happens? See, is a group accounts. You have parent company. You have subsidiary company. Okay. The rule says that parent should be 51% and subsidiary will be to 49%. Is it right? Now, what is maybe now you will see so many different combinations will be there. Is that? Assume the parent company will have another under its control, but it is what? It is less than 20% or equal to 20%. The rule says that if it is less than 20% or equal to 20%, it is going to be called as a associate. Is it right? It is going to be called as an associate. That's all. Is that in the examination they will give a question like this. They will give the parent company and subsidiary company here, and they will also give parent company and the associate company. Okay? The same rule follow. Nothing is there. You have the group structure, you have the net assets, you have the goodwill, you have that non-controlling interest, you have that retained earnings, and any 5 adjustments will be there, and subsequently you have the last one. Okay? So that is the basic concept which we are going. What it says, define an associate. What is the rule for the associates? How you are going to have the principles and reasoning in terms of what? Equity. Definitely it is only based on what? It is based on the equity shares. Is it right? It is based on the equity shares. How we are going to create the structure of the group. What we are doing? We are preparing a consolidated statement of financial position, and we are talking about consolidated position of the profit and loss account into a single subsidiary and an associate. In a single subsidiary and an associate. We are adding what? In this lecture we are adding an concept of associate. Fine. That's the basic thing we will work. Is that? What it says that, is right? It says that associate will be there. We are talking equity accounting based on the equity say cash flow statement for financial position. Is it right? Cash flow statement for financial position, statement of profit and loss account, trading with an associates, and definitely we are going to say, see what is the difference is the difference between a profit parent company and subsidiary company and associate is here you will have a control. Is that? Here you will have a control, whereas here we don't have control because it is that there is a cap of how much? There is a cap of 20%. Okay, that is the only difference. Other things will remain. Unrealized profit, is that how we have to intergroup transactions, unrealized profits, how we have to work it out. Fine. That's the same concept. That is the reason I just taken the previous 2 chapters little bit easy, because we are going to do as many things as possible. Is it? As per International Accounting Standard 28, An entity which has an investor has a significant influence. Is it significant? Now, what is the significant influence? That is a big question mark. There is nothing like assumption. Is assume that the shareholding will be between what? 20% and 50%. Yeah, when we say a significant influence, it is the power to participate in the decisions of the industry, but is not control. Very clearly, they have mentioned very clearly. Or there is no concept of control, or there is no concept of joint control. Means they will not have any control or any joint control. That's only thing you are interested in your investments as such. Is it? Only investments. No, nothing more, nothing less. Now, what we say equity accounting. Equity accounting is a method. Is a very specific. Focus here. Somewhere it will be in the MCQ. Is it right? Somewhere it will be in the MCQ. Say amongst the MCQ also, it will be there in the section A. Yeah, equity accounting is a method of whereby investment is initially recorded at cost, and after adjusted thereafter by the post acquisition change in investor share. What happens? See the things. You are having a parent company and you are having a subsidiary company. Fine, this is very clear. But what is the equity accounting? You have initially invested how much? You have initially invested 10% in the associate. Is it right? You have initially invested how much? 10%. Now what you will do? You will say that 10% there is no concept of associate. Is there? 10% is no recognition. You will increase to what? You will increase to 20%. What will happen? You will become an associate. You have the option. Is it right? You have the option. From 20%, you will increase to 25%. Is it? You will increase to 25%. From 25%, you will increase to 32%. I'm just taking. If you are increasing, that is the basic thing. What they say, they said that adjusted thereafter by the post acquisition change in the investor share. Is it? The share of the investor is changing. Is it right? Of the net assets of the assets. Is it? That is the basic thing. Now, the effect of this is definitely it will affect your consolidated financial statements. Is that today you have purchased 20%, then you will say again I buy 5%, 10% additionally I will add, then fine it will. 100% of the assets and liabilities of the parent and subsidiary on a line by line basis. What we have done till now is line by line basis only. Is that we will take every other thing and we will consolidate. Okay, we will consolidate. An investment in associated within where we are going to show in the non-current assets. Is it? What you are going to include in that investment, the amount of investment we have made, plus we know post acquisition profits. Is it right? Post acquisition after the date. Is that we have done as on the balance sheet, as on the date of acquisition, as on the date of reporting date, you will have the difference. Is it? The difference between the acquisition date and the reporting date. Is there a difference between the acquisition date and the reporting date is the post acquisition profits. Is it? Again I am writing. Is it? Difference between acquisition. Is it? This is the acquisition date and this is the reporting date. Is it? The difference between the acquisition date and the reporting date is simply the post acquisition profits. Okay. Next, how we are going to consolidate profit and loss account 100%. The same thing based on income and expenses, line by line basis. A single line, only one line. What we are going to show? Statement of profit of associates. That's all. If what is that? Whatever the profit share, only the share of the profits we will show. Will not show you anything else as such. Is it right? That is the in the profit and loss account. You have this format. Is it right? What they say? Associates in the statement of financial statements. Is that? You have the cost of investment. You have the what is the share of post acquisition profits. You know this. You know better than me now. Alhamdulillah. You have any impairment losses you will deduct. Any provision for unrealized profits you will deduct. Okay. Fine. What is the group structure? Working one. Go by these things. Okay. Go by these things and remember this. Working one always be a group structure. See, what my understanding and what the marking scheme says, this is going to be almost 2 marks. Is right? This is almost 2 marks as such. Next, you say every working will be there. Assume for this also you will have what? You will have for this also you will have how many marks? 2 marks. That's what we say. Date of acquisition, date of reporting, post acquisition. Is that share capital, reserves, premium, retained earnings, fair value, depreciation you have to deduct. Is it right? Any provision for unrealized profit we have to deduct. Is it right? Now goodwill also it is going to be for 2 marks. Parent holding, what is the investment at value minus NCI at acquisition, they will give you it in adjustments. Next, fair value of net assets deduct, we will get goodwill. If there is any impairment we have to deduct, we will get the goodwill of statement of financial position. Non-controlling interest, you have the same thing. Is it right? You have that non-NCI at acquisition, any post-acquisition profits you have to add, any impairment you have to deduct. Is it right? Any impairment you have to deduct. Whereas the retained earnings, same thing. Parent company 100%, you have the post-acquisition profits of the subsidiary, post-acquisition profits of the associate. Any losses of the subsidiary, any losses of the associate. Unrealized profit we have to deduct of parent to subsidiary, or where parent sells to associate and associate sells to. So any unrealized profits you have to deduct it. What is the investment in associate company? What is the cost of investment? Any post-acquisition profits we have to add. Impairment any there you have to deduct, and any provision for unrealized profits you have to deduct. These are the 6 workings. Almost all the workings we have done. Only thing is we have to be little bit careful with respect to associate. Other things are going to be same. Are you clear about this? Is it okay? Fine. Is it? That's okay. Fine. Two 593. Okay, fine. They gave you the balance sheet. Is it right? They gave you the financial position. Okay. Property, all the 672,000 shares of Lala and 672,000 shares of Lala. Is it right? And 168,000 shares of Po. Current assets, inventory, line by line approach. That's all. Receivables, bank, equity, retained earnings, current liability, and taxation. Is it right? How much you'll get? 2593. Okay. Now, what they said? They say that they have acquired how many shares? They acquired shares of Lala on January 1st January, uh, but they have losses. Okay, losses are how much? 56,000. This we acquired shares of Po Limited, but the retained earnings are how much? 140. Okay, an impairment test was shown at the year end. Goodwill for Lala remains unimpaired, but the investment in Po has become impaired by how much? 2,800. We'll take what are the impairment losses. Dispute group sales were non-controlling interest. What is the fair value of NCI? Fair value of NCI is 160. Fine. Fair value of NCI is how much? 160. Now, okay. Fine. Next. How much is the share? 840. Is it right? 840. 672 divided by 840. 80%. Fine. And 560. Okay. 168 divided by 560. 30%. Is it right? First and foremost, is it first and foremost, what you have to do? Is it first and foremost, group structure. Okay? Parent, I will write here, parent to subsidiary. Okay? How many shares are there, subsidiary? Subsidiary shares are 840. Is it right? Subsidiary 1 minute. Why we have to take that much? Okay, fine. Okay, subsidiary shares are how much? 840. Parent is investing how much? 672. Is it right? 672 divided by 840 into 100. It comes to how much? It comes to 80%. And it comes to how much? 20%. Okay. It comes to an 80% and 20%. Next. How much is the associate? Associate, how many shares are there? Associate equity shares are how much? 560. Is it right? 560 shares. How many shares they have purchased? 168. 168 by 560, it comes to how much? 30%. The share of associated how much? 70%. Okay? These are very important. Fine. Next. We are concerned about subsidiary only. Okay, we are concerned about what? We are concerned about subsidiary only. This is subsidiary, this is an associate. Okay, this is a subsidiary, this is an associate. Working note 2. Is it right? Net assets. Is it right? Net assets of whom? Subsidiary. Is it right? Net assets of subsidiary. What is that name? Lala. Okay. Okay. At the date of acquisition. At the date of acquisition. At the reporting date. At the reporting date. Post acquisition. Fine. Nothing we are doing any. Okay. We are taking what? Share capital. Is it? Share capital. At the date of acquisition is how much? 840. It will remain. It was no change is there. They have not issued any bonus shares. All those things. Is it right?
Acquisition level for reporting 840. Okay.
Is it okay?
Yes, it's okay.
Retained earnings. Retained earnings of how much? 602. Is it? Is it? Retained earnings are how much? That is 1 minute. That is the reporting date, not on the acquisition date. Is it right? On the reporting date. Balance sheet is reporting date. Okay. Balance sheet is how much? Reporting date. 602. Next. We have done something now. They have a loss. Lala has a loss. How much is the loss? 56,000. Okay. They have a loss of how much? 56,000. This is in thousands. Okay. This is in thousands. No. 56,000. Okay. Date of acquisition 56,000. Is it it? Reporting date how much? 602. What is the post acquisition difference? What is the post acquisition difference?
$546. 546.
When they have acquired 1st January, is it right? When is the December? See, then when they have acquired, they acquired on 1st January, is it right? When they acquired on 1st January, how much is the losses? This much. Okay. And the date of reporting, is it right? Date of reporting is how much? 602. Is it right? 602. See, I told you. Very simple. 1, 2, 3, 4. 4 is not 2 minus 3. 2 minus 3. When you have acquisition, is it right? When you have retained earnings, is it? Retained earnings has been decreased. Okay, retained earnings has been as 12. Is it right? Now, if you go back, is it right? If you go back, what happens? This is the part 56,000 is the part of 62. Is it right? It is continuous. You have 56,000. Is it right? 56 was our loss. And by the time it happens how much? 602 as such. Means this is a continuity. We should not take in isolation. We should not take in isolation. Means if it is going to be post acquisition, when they have acquired, this is post acquisition. This is the, from whatever happens from here. Is it? Whatever happens from here, it is post acquisition. Is it? Whatever happens from when they have acquired, they acquire it on 1st January. They acquired it how much? 1st January. Now, what is the post acquisition profits? Post acquisition profits is nothing but see. Post acquisition profits is nothing but see. This 56,000, is it right? This 56,000 is the loss, is it right? Is the loss on the date of acquisition. Then they have made the profits, is it? When they have made the profits, means it is these losses it will be like this. minus 56 minus 602. It comes to how much? It comes to 658. What is the rule we said? We said that 2 minus 3. Is it right? We said 2 minus 3. Is it? 2 is what? Date of acquisition. Date of 2 means minus. Again I will remove this. Minus 56 or minus of minus 602. It comes to post acquisition profits will how much? 650. Is it clear to you? See, you have losses how much? 56. Is it right? Now losses has been overcome. Okay, you have overcome the losses. It is like this, very simple. See the thing, it is like this. You have minus 56, is it? Minus 56 to 0, 0 to 602. Is it right? Minus 56, is it? Minus 56. In order to become a plus 62, plus 602, what you have to add? You should have earned this much profits. Is it? You should have earned this much profits. In order to understand my point, what I am saying, this is minus 56. This is on the date of acquisition. This is on the date of acquisition. How much was there? 56. Minus 56. On the date of reporting date is how much? Reporting date is you have 602. Now you cannot take only 602. If you are recovering from the losses to profits, definitely you should have earned this much profits. Is that this plus 56? Is that when you make plus 56, then only it will become what? It will become 0. Is that when you make plus 56 profits, it comes to 0. Means whatever the reporting day profits, to these profits, what we have to do? We have to add 56. It comes to how much? 658. Yes or no? Very simple. Is that take it your own. Take my example. I am having minus balance. Is it right? I am having minus balance of minus 56. Now I am having 602. Is it right? Beginning of today morning I am having minus 56. End of the day I am having 602. It means what? Minus has to fill up. Is it right? Minus has to fill up. Then only it will become 0 and plus. Is it right? How much at the end of the day I am having 602? It means this 56 is recovered. They have earned that much profits. Now from these profits you remove the loss 56. It becomes how much? 602. It becomes how much? 602. Okay. That's why you understand this one. It makes more easy. Where I have written that, this one. Okay. Next. Can I go to the next one? Means how much is the post acquisition profits? Post acquisition profits are 658. Can I go to the next one? Point number 3. What is there? Goodwill. How much is the cost of investment? They have mentioned anywhere cost of investment? 140, 280, 160, no. They have made here investment. Cost of investment is how much? Cost of investment is, where is that? Cost of investment how much? 644. Is it? Cost of investment how much? 644. Is it? Cost of investment in Lala. This is what? This is the parent company. Okay? This is the parent company. How much is the loss of cost of investment? 644. Is it right? We have to add. Is it right? What we have to add? Add. Is it? Add fair value. Fair value of NCI. They mentioned here somewhere. How much is the fair value of NCI? Fair value of NCI is 160. Is it? Fair value of 160. How much? 160. Is that 40804? Is it right? Less. Less. Is it? Net assets. Net assets at acquisition. Is it? Net assets at acquisition. How much is the net assets? Here we have not done the total. Is it at 1 minute? Fine. How much is the total? How much is the total here? 2414. How much is there? 10 minus 6 4. 13 minus 5 8. 784. Okay. 784. Is it right? How much? 784. Is it right? Is it right? How much is the goodwill is how much? 20. Any impairment is there in goodwill? Any impairment of goodwill? An impairment test in the shown that the goodwill of Lala remains unimpaired. No, but the investment and PO has become impaired. Investment in the associated is become, okay, fine. Not in the Lala, okay. Investment in the, this is nothing but this is the goodwill. Fine. Next, what we have to calculate? NCI, okay. What we have to calculate? NCI, non-controlling interest of subsidiary. Is it right? See, almost we are doing the same thing. Is it right? Fair value of NCI. Is it right? NCI at acquisition. At acquisition. How much is the, what is the working note? Working note 4, 0.4. Is it right? 0.4. How much is there? 160. Okay. How much is there? 160. Next, post-acquisition profits. How much is the post-acquisition profits? Post-acquisition profits is 658. Is it right? Post-acquisition profits are 658. Add post-acquisition profits. Is it right? Post-acquisition profit. 658 into 0.2, 20%. Okay. How much you will get? 658 times 0.2. 131.6. Okay. 131.6. 0.6. 19291.6. This is NCI. Is it? This is NCI. This is point number 4. Okay. Fine. Point number 5. Is it right? Point number 5 is what? Group retain earnings. Is it right? Group it. Well, how much is 1, 2, 3, 2? Okay, 1, 2, 3, 2. Is it right? What that company name? Dipsy. Is it right? Dipsy. Dipsy retained earnings. How much? 1, 3, 1, 2, 3, 2. Okay. Next add 80% of post acquisition profits. Is it right? Acquisition profits. Is it right? 658 into 0.20. How much will get? 658, 658.8, 5 of 658 into 658 into 0.8. It is group na. It is group. It is not. Sorry, I have written wrong. It is group na. 658.8. 80%. Is it right? 658.8. How much you'll get?
$526.4.
526.4. Okay. 526.4. 526.4. Okay. Next. Add 30% of profits in associates. Okay, in associate. What is the profit in associate? 448. Is it right? 448. Is it right? 448 is the profits in associate. Is it right? Next. Profit. See what happens. See the things. Is it right? Here. 2007 or 8. Is it right? How much is the profits? How much is the profits? No, it's not like that. It is not like that. 1 minute. It is not like that. 1 minute. I will write here only associate. Is it? Profits. Reporting date. Profits. Reporting date. How much is the profits reporting date? Balance sheet. How much? 448. Is it? 448 minus profits acquisition date. Is it? Profits acquisition date. How much? Balance is there. What they have mentioned? Yes, post. Yes. How much is acquisition date? Acquisition date is 140. Okay. Just wait for a while. Okay. Wait for a while. 1 minute. How much you will get? 448 minus 140. 448 minus 140. Yes, 448 minus 140. It comes to how much? 308 into 30%. Is it into 30%? 30 means how much is the share of the not parent company? How much is the share of the Dipsy company? 30%. Is it right? 30%. It comes to how much? It comes to 92.4. Okay, it comes to 92.4. And Dipsy acquired the shares of Lala. An impairment test at the year end showed that goodwill for Lala remains unchanged, but the investment has become impaired by how much? Investment is became unpaid by how much? 2,800. Is it right? Impairment of assets is nothing but the loss. Is it right? Impairment of associate asset. Is it right? Point number 3. Okay, point number 3, 2.8. It is in thousands. Okay, how much? 2.8. 2.8. Fine. How much you will get? 1232. Are you understanding how we have done? First, simple. Where we have taken the Dipsy retained earnings. We have added the profits of the subsidiary. We have added the profits of the post acquisition profits of the associate. We have taken the impairment off. It comes to how much? 1848. It comes to how much? 1848. Fine. This is the retained earnings. Fine. Okay. This is the retained earnings. Next. Point number 6. Is it right? Point number 6. Investment in associate. Is it right? What is the cost of investment? Cost of investment is how much? You see the asset. You see the assets. Is it right? You see the assets. Cost of investment is how much? 224. Is it right? How much is it? 224. 224. Is it right? Next. Add. Is it right? Post acquisition profits. Is it? Post acquisition profits. Is it right? Add post acquisition profits. Is it right? Profits. Post acquisition profits. Working note 5. Is it right? How much is their post acquisition profits? 92.4. Is it right? 92.4. Next. Less. Okay. Less impairment. Point number 3. Because one side we are doing adjustments in the liability side, on the other side you have to do adjustments for the investments also. Is it right? That is the reason. 2.8. 2.8. How much you will get? 224. 313.6. Is it 313. That's all. Done. Is it? See what we have done. Again, I will go through it. Okay. We have done how. This is the easiest way. Is it? First, we have done the group structure. Then we have done the net acquisition, net assets. Is it right? We have calculated acquisition, reporting date. Then we have calculated goodwill. Then we have calculated NCI. Is it right? Then group retained earnings and investment in associate. Is it right? Now, 6. Is it right? This is 7. Consolidated financial statements of DIPSI, okay, of DIPSI as on 31/12/2009. Okay, next. Non-current assets. Okay, in the non-current assets, first we have to write goodwill. Is it right? First we have to write goodwill. Goodwill comes from where? Working 3. How much is the goodwill we have calculated? We have calculated goodwill how much? 20. Okay, we calculated goodwill how much? 20. Next. Nothing is there. Line by, this is the what? Line by line basis. Okay. Property, plant and equipment. Is it? Property, plant and equipment. We have to take only for parent and subsidiary. Okay. We have to take only parent. 1120,980. Okay, 1120,980. We should not take for associate. Okay, we should not take for associate. 1120 plus 980. How much will get? 1120. 1200, 2100. Check. Is it? I don't have calculator. Now, what you have to write? Investment in associate. Is it right? Investment in associate. Which one it is there? Point number 6. Okay. Point number working note 6. Working note 6. Is it right? Working note 6. How much is there? 313.6. How much will get this one? 0.6 3 2 1 3 3 and 1 4 2 4 3 3. Okay, 2 4 3 3. Good. Fine. Next, current assets. Is it right? Current assets. Fine. Current assets. Inventory. Don't take associates. Okay. Don't take associates. Only associates are restricted. How much is the inventory? Inventory is 380 and 640. Okay. Inventory is how much? Inventory is 380 plus 640. Okay. How much you will get? 0 0. We will write here 0 2 4 2 1 1. Okay. Next, what is there? We have receivables, we have bank. Is it that receivables are how much? 190 310. Bank is how much? 3558. Is it right? Receivables. Receivables. How much? 190. 190 plus 310. Is it 190 plus 310? How much? 192, 400, 500. Okay, bank. How much? 35 plus 58. It comes to how much? 93. Total how much? 3, 3, 3, 11, 1, 6, 1, 0, 1, 6, 1, 3, 1, 6, 1, 3. Okay. Okay. Total assets. Total assets. How much is there? Add 0.6, 3 and 3, 6, 3 and 1, 4, 10, 1, 4046. Is it right? 4046. Next, equity and liabilities. Equity and liabilities. Okay. Now, how much is that? 1120,840. Is it 1120? Not 840 only. Only parent company will take 1120. Okay. Only equity. Equity of parent only. Is it 1120? Is it? We have calculated retained earnings. Is it? We have calculated retained earnings. Working note number 5. Is it right? How much is the working note number 5? 1848. Is it? How much you got it? 1848. Next. Okay. Next. Next. NCI. Is it right? NCI. Is it where we have done NCI 4? Is it right? NCI we have done where? 4. How much? 291.6. Is it? 291.6. No, first we have to add this. 8,86929. Add, then you have to add. Okay. You should not add non-controlling interest directly. Working 4. Is it? Working 4. 291.6. That's all. Second, how much is the 291? Okay, 291.6. Next, how much you'll get? How much you'll get? 8 plus 6, 4, 1, 1, 7, 8, 18, 1. See, Allah Malik. Yes, tell me how much? 3259.6. Yes, 3259.6. That is going to be called as shareholders. No, we don't write anything. Okay, fine. Not shareholders funds. Nothing will happen. Okay. Next. Next, we have what? We have no current. You don't have non-current liabilities. Current payables, taxation. 140, 480, 150, 480, 91, 66. Is it right? Current liabilities. Okay, current liability, trade payables. Trade payables how much? 150, 480, 150. It comes to how much? 630. Is it right? It comes to how much? 630. Taxation. How much they said? 91.66. 617, 617, 69, 15. Okay. How much will get? 7, 8, 7. Okay, 7, 8, 7. Now add these two. Add these two. 0.6, 3259.6 plus 787. 3259.6 plus 787. How much you'll get? 40. It took us 40 minutes, okay? It took us how not 40 minutes, 35 minutes, okay? It took us how much? 35 minutes. In the examination, it will take 30 minutes, okay? You have to do 30 minutes, then you have to revise for this. Okay? Is it clear? Fine. See, our plan is very clear. Okay, our plan of action is very clear. We are going to do tomorrow disposals. Fine. Next, we will take ratio analysis. Okay. Then we have some environment, all those things. Is it Friday, Thursday, Friday, Saturday? Okay. Mostly by Saturday onwards. It's only a revision. Randomly, I will take cash flow statement. I will ask you what you need, where it is difficulty. Those things I will focus. You have to tell me very clearly in advance that I want this. I will focus on that. Plus, I will do randomly also. Okay? I will mix the things. I will take your requirements and I'll match with this requirement. Section A, Section B, Section C, left, right, center, as you wish. Okay? Inshallah khair. It's not difficult. Don't worry that. Alhamdulillah, we are on track. Okay? We are on track, and the best part is we are not rushing. Okay? We are not rushing. And we are not in panic situation. That's very important. If the fair value of the associate net assets at acquisition are materially different from the book value, fine, that's what it says. Should be adjusted same way as for subsidiary. Is it? The fair value of the assets will be different from the book value. What we have to do? Generally, the associate is considered to be outside the group. What we have done, have you taken anything of the associate? No. We have not taken anything of the associates. Is it right? We have taken only the investment in associate. That's all. Therefore, balances between group companies and associate will remain in the consolidated statement of financial position. Is that we have not done anything? Is that we are just working out. If you take into consideration, is it right? If you take into consideration what we have done, have you taken anything? Only thing we have added in the asset side, investment in associate, and on the liability side, we have taken it in the retained earnings. Is it? And we have done a separately investment in associate. Fine. That's what it says. So if a group company trades with the associate, the resulting payables and receivables will remain in the consolidated financial statements. Will not touch anything about it. Will not touch anything about it. Will remain same as we have did with respect to the previous case. We have not touched anything related to assets, liabilities, or equity of the associate. Okay. Unrealized profit in inventory. The unrealized profit of trading between group and associate must be eliminated. Fine, we have to remove it. Is that means if we are buying from the associate or we are selling to the associate, to the extent of what is the investor's interest. Is it right? Owned by the only we have to take the parent company. We are not going to supposed to take anything with respect to associate. Adjustment made for the unrealized profit in inventory as follows. First, you have to determine what is the closing inventory and whether it is as a result of sale or from associate. Sale to or from means we have sold or we have purchased from associate. We have sold to associate or associate sold to us. Is it use markup margin? What is the markup margin to calculate the profit? First, we have to based on the markup. Yesterday we have done 33%. Is it right? If 100% is the cost, 33.13% is the profit. Means total profit will be how much? We have to add in the same way. Okay? We have to add in the same way. Well, what happened? Make the required adjustments below. Anything, everything is done by the general entry. What we have to do? Cost of sales is the expenses. Is that? Cost of sales is expenses in terms of what? And correct. When parent sells to associates, is it? When parent sells to associates, inventory. Okay. When parent sells to associates, inventory. Yes, when parent sells to associate, inventory. What happens? We will not take sales as a consider sales. Is it right? We will not take sales. Instead of sales, what we will say? We will say cost of sales. Is it? When we are making adjustments. Okay? When we are making adjustment. Credit is what? Definitely. Is it? We are taking that element into separately. Is it right? Then what happens? If there is any profit or loss is there, after that we are going to take into the, here it is there, see the thing. What is the investments in associate? Investments in associates are what? Cost of investment, post acquisition profits any, minus impairment. Is it right? Minus impairment. That same concept we apply here. Is it right? The same concept we will apply here with respect to the investments. Fine. Now, when you are talking in terms of the sale, when associate sells to parent, is it right? When it is reverse order, is it right? Means parent is purchasing, associate is selling. Is it right? What happens? How it will work? When the associate sells to parent, is it right? See, definitely profit will be credited. In original case, is that what will be happen? Debit, see what happens when you are normal selling. Is it a normal selling? How it will, when parent sells to, when associate sells to parent, is it right? In the parent company, is it right? First things separately, that's very important. In the parent company, debit will be what? Debit will be inventory, sales, is it right? Debit what comes in. Credit will be what? Credit will be the whatever the share of profits or group retain earnings, is it right? Whatever the profits we are going to earn it. Now when we are making, when associate sells to parent, what we are doing? We are eliminating, is it right? Whatever the general entry we have done here, this general entry will be a reversal. Again I will tell you. First you have to know what is the original entry. Is it right? That is very important. First we have to know what is the original entry, then we have to know what is the reversal. Is it original? When parent sells to associates, is it right? Parent sells to associates. I am just thinking how more easy I can put forward it. Debit all expenses and losses, credit will be incomes and gain. They credit what goes out. Is it right? When parent sells to associates, adjustment entry after acquisition. After acquisition, adjusting entry. Okay. Sales minus, we are what we are doing? We will take into consideration sales minus profit. It comes to how much? That is the reason. Reversal. We will not write sales. Is it right? Instead of sales, what we will write? We will write cost of sales. Is it right? And credit will be what? We will not write bank. Is it right? Credit what goes out. Is it right? Your investments will get affected. Is it right? Your investments, unrealized profit. See the thing. If the investment is an asset, is it right? If the investment is an asset, if the asset increase, now I can put like this. Is it right? Where is that? Is that? See the things. If investment is an asset, is it right? Is an asset. If asset increases, it will be on the debit side. Fine. Now what happens? We are talking in terms of unrealized profit. When the unrealized profit, what will happen? The asset will decrease. When the asset will be decreased, it will be on the credit side. What we are crediting? We are crediting the investments in associate, because the reason is the unrealized, because of unrealized profit, it will have impact on the investments. Is it unrealized profit? By deducting the unrealized profit, the assets will also decreases. If the asset is decreasing, it will be on the credit side. That is the purpose. That is the purpose of the investments in associates. Is it? That is the purpose of it. When associate sells to parent, is it right? When associate sells to parent, first you should make it a point. Is that when associate sells to parent, what will be the things? What happens to the parent company? Is that what happens to the parent company receives? Is it right? Parent company will receive purchases. Is it? Or parent company receives inventory. Is that? We can discuss like this. We will take inventory as a concept. When inventory is increasing, original entry I am talking about, asset increases, inventory will be on the debit side. Is it right? Debit side. What happens? You are the inventory will increase. Is it right? When associate sells to parent, inventory will increase. Fine. When associates sell to parents, credit will be what? Credit will be bank. Is it right? Credit will be bank. Now, after the acquisition, in terms of consolidation, what will happen? You have a reversal. Is it right? You have a reversal. You can put like this also, but say what happens? We will not take bank. Is it right? Bank account will never, we cannot decrease bank account. Is it right? We cannot decrease bank account. Instead of bank account, what we'll say? We'll talking about the, what is the share of the profits. If there is a profit, it is a credit all incomes and gains. Now what happens? You are eliminating the profit. Is that? You are eliminating the profit from the transaction as such. Credit will be inventory. Is it? Credit will be, because inventory is decreasing. Is it right? Inventory, in corresponding inventory value will decrease. In terms of what? In terms of unrealized profit. Whereas what we are doing in the debit side, we cannot show it as a bank. Never ever bank asset will, is it? Bank asset will. Here we have credited bank. Is it? Will not get any refunds. Is it? We are not getting any refund. Instead of that, what we will do? We are talking in terms of what? We are talking in terms of the share of the associate. Little bit, the reason is, first you should know the original entry, subsequently we should know the reversal. Now what happened? The very difficult part, I will agree with you. The difficult part is we cannot take bank. Is it right? We cannot, instead of bank, we cannot increase bank, we cannot decrease bank. Is it right? Now bank account will also get consolidated. When the bank account is also getting consolidated, definitely we have to substitute that bank with the associate. Is that? Substitute the bank with the associate. Fine. Just keep it in mind. Again, when we do the actual question, we will have more 100% clarity. Is it right? We have 100% clarity as well. Now, can I do this one? Fine. The moment we will have more understanding answer. Okay. Now what it says, you have Is it right? What it says that you have the property, plant and equipment 14 and 7, investment 10, current assets, the all fine, okay, done, fine. We'll come back to that, okay? Now, what have P acquired 75%? Is it right? How much P acquired? 75% of the yes several years ago, paying 5 million in cash. At this time, the balance of year's retained earnings was how much? 3 million. Fine. P acquired 30% of the equity share capital. Very simple. Now first what you have to do? You have to put the group structure. First you have to put the group structure. Is it P and S? Is it P and S? And what is the A limited? Is it right? P and S and A. Is it right? P and S and A. How much they have several years ago? See, times are very important. Several years ago, and P acquired 35% on 2006. When they have mentioned 2006, is it right? They have acquired when? Was 1st October 2006. This is the acquisition date. Is it that? This is the acquisition date. Reporting date is what? This is the reporting date. How much they have purchased? These have purchased 80%. Is it right? 80% to whom? And sorry, it's not 80%. Sorry. How much? It is 75% to P and 25% to yes. Is it right? This has been happened several years ago. This has happened 2 years ago. Fine. Automatically you will get it. Next, what they have said, what we have to calculate? Net assets. Okay, net assets of subsidiary. Is it right? We have to calculate what? Net assets of subsidiary. Is it right? At acquisition date. Is it right? Acquisition date, reporting date. Is it right? Post acquisition profits. Post acquisition profit. Take for the subsidiary only. Okay, take for the subsidiary only. Okay, for S. Is it for S only? How much is the share capital? How much is the share capital? Share capital is how much? They have given. Is it right? 1,000. Is it? They have given how much? 1,000. It has been same. Is it right? 1,000 and this. Is it? Next, retained earnings. How much is the retained earnings? 5,000. How much is the retained earnings? 5,500. What is the retained earnings at the date of acquisition? At the time of acquisition, balance of retained earnings are how much? 3 million. Is it right? This is in thousands. Is it right? 3 million. Is it 3 million plus 3 zeros? Okay. Here how much? 5.5550. Okay. Reporting date is the balance sheet. Okay. How much is the difference? 2,500. Is it right? 2500. We don't have anything else. Is it right? We don't have revaluation, all those things. Here how much? 4000. Here how much? 6500. Here how much? 2500. This is the post acquisition profits. Okay, that is the post acquisition profits. Fine. Now what is the next one we have to do? What is the next one we have to do? Point number 3. Point number 3 is goodwill. Is it? Point number 3 is goodwill. How much is the investment of the P Limited? 5 million in cash. Is it right? 5 million in cash. What is the NCI? And what is the NCI? 5 million in cash. This has been written here. See the thing. How much they paid? 5 million in cash. Is it right? 5 million in cash. Is it? Parent company cost of investment. Is it right? Parent company cost of investment. How much? Is it right? In terms of cash. Is it right? In terms of cash. How much? 5 million. Okay. This is in thousands. Okay. 5 million. 5000 plus 3 zeros. Is it right? Next. Fair value of how much? Fair value of NCI. Fair value of NCI. Point number 6. Is it? Point number 6. How much is the fair value? 1600. Is it right? 1600. 6600. Fine. Next, we have done fair value of net assets. Is it right? At acquisition. Is it? Net assets at acquisition. Working not 2. Is it right? How much we have calculated? 4000. Is it right? 4000. How much we'll get? 2600. This is nothing but goodwill. Any goodwill adjustment is there? Any adjustment of the goodwill is there? Impairment of any investment in the investment paid. You have valued fair value method. Nothing is there. Is it right? Nothing is there. Fine. Okay. Any doubt? Fine. Next, goodwill is over. Next, what we have to do? We have to do the point number 4, NCI. of subsidiary company. Okay, NCI of subsidiary. Fair value at acquisition. Fair value at fair value at acquisition. Is it right? Working note 2. Is it right? Working note 2. How much is there? Fair value of acquisition 1000. Fair value of acquisition. I will. Is it right? Non-controlling unsaid. Fair value of acquisition. Is it right? So I also forgot about this. Point 0.6. Is it right? 0.6. How much? 1600. Is it right? Add post acquisition. Is it right? Post acquisition profits. Is it right? Post acquisition profits 2500. How much? What is the share? 25. Is it 2000? How much will get? 625. Are you clear about this? 2400 from where we got? 2500 from working note 2. Is it right? Working note 2. Is that working note 2? How much is there? 2225. Is it 2225? Fine. That is working note number 4. Anything is there, just let me know if I am missing something. Okay? If I am missing something, please let me know. Okay, next, group retain earnings. Is it right? Group retain earnings. Is it group retain? How much is the parent company? How much? Parent company is 7500. Okay. Parent company is how much? 7500. Okay. Next. Subsidiary how much? Post acquisition. Post acquisition of subsidiary 2500 into 0.75. Is it right? 201875. Is it right? Associate. Is it right? Associate. Here only we have to be little bit careful. What is that? They have say 1.5 million. Is it right? 1.5 million. How much is that? How much is the 2.5? Is it right? Associate. I'll change the ink. Okay. Associate. Reporting date how much? Reporting date is 2500. Okay. Acquisition date is how much? Acquisition date is 1500. Is it right? Minus. Post acquisition how much? Post acquisition is how much? 1000 into 0.3. It comes to how much? It comes to how much? 300. Is that? It comes to how much? 300. What we have to add? We have to add 1. We have to add 2. We have to add 3. Is it right? Next. Little bit careful. There is a impairment in investment. Point number 5. Okay. Is it right? Point number 5. Less impairment in investment. Okay, impairment in investment. Point number 5. How much? Allah, we don't have space. Is it right? Point number 5. Okay, fine. Nothing will happen. Okay, fine. Impairment is how much? 35,000. Okay. It is in thousands. Okay, it is in thousands. How much? It is in thousands. 35. Okay. Next. As a result of trading, fine. Next. Next, 1 minute. We acquired this much, 750, 1.5, 1 million markup. Okay, yeah, 1 million markup. $1 million markup. Where is that? I still have 1/4 of these goods in inventory. 1 million at a markup of 25. At the year end, A still held 1/4 of these goods in inventory. P held 1 million as a markup for 25%. Fine. P held. Point number 3. 1 minute. I just give me 1 minute. I will make it simple. Okay. Current assets 1,500. Good. 1 million at a markup of how much? 25%. 25% at a markup of 25% means here only the tricks will happen. Okay, here only the tricks will happen. Fine. See the things. Is it right? I am writing here. 1 minute. Okay, first I will complete it, then you can take. Is it right? Provision on unrealized profits. Okay, POP, provision on unrealized profit. How much is the value value, this is point number 3, is it right? Point number 3, value is how much? 1 million. Okay, value is how much? 1 million. Markup is how much? Markup is 25%. Okay, markup is how much? 20. Then we have to see what is the cost. Cost is question mark. Is it right? Value, if I want 1 minute. If markup is 25, markup is 25, sale is how much? Sales will be 125, 100 plus 25. If cost, if if cost is it has to be like this one. It has one. If 1 minute, one sec. If sale if sales we have to we want to know profit on inventory. Profit of inventory is 25% markup. Is it a 25% markup? 100 plus 25, 125. Is it right? 125. If sales of 1 million, is it right? Sales of 1 million. If sales of 1 million is if sales of 1 million is equal to how much? Equal to 125. Is it right? How you got 125? 100 plus 25%. 100 is the cost, 25 is the profit. Fine. Is it? Now, if profit, we have to know what is the profit we want to know. Is it right? On 1 million, profit of 25% will be how much? Is it? Profit of 25 will be how much? 0.25 divided by 1 into 1.25. No. One minute. 25 divided by 125, 25 divided by 125 into 1. 25 divided by 125. 1 minute, Aisha, 1 minute. If 125% including markup is equal to 1 million. Okay, now then 25% of markup is nothing but profits. Okay, markup is question mark. Is it right? Is question mark. Now 25 divided by 125 into 1 million. 25 divided by 125 into 1 million. It comes to how much? See that. Now it comes to how much? 0.2. See, now is it how much is the profit? Profit is how much? Profit is how much? Profit is 200. Okay, now cost is how much? Cost is 1 million. 1 million minus 0.2. Okay, cost is how much? 800. See what they have mentioned. We have to take the unrealized profit. Okay, that is what it says. We have to take unrealized profit. When we say it's an unrealized profit, how much value of the goods they have sold? Is it how much value of the goods they have sold? Profit on sale. Is it profit on sale? Profit on sale is how much they got it. Profit on sale is how much? Profit on sale is 1 minute. Okay, fine. Now we will keep this as it is. We will keep this. This is the point number 5. Okay, point number 5. Is it right? Yes. Now see the thing. Again I will explain you how much they have sold. They have sold it for 1 million. Is it right? When they have sold it for 1 million, they have charging how much? 25% markup, means 100 plus 25 equal to 1 million. Okay, 100 plus 25 into equal to 1 million. When 125 is including markup is 1 million, what is the 25? What is the unrealized profit? Is it 24? What is the 25%? 25% is how much? 25% is it comes to how much? 25% comes to 200. Fine. Now this is what we want to know. That's all. In 200, what they have said? In 200, what they have mentioned that. Is it in 200 what they have mentioned? They have said that 1/4 of the goods still not sold. Is it right? They have not sold 1/4 of the goods. Is it right? They have not sold 1/4 of the goods. Is it right? Means 1/4 of the goods not sold means 1/4 of the profits is unrealized. Is it right? Unrealized profit is unrealized profit on unsold goods. Is it? Unrealized profit on unsold goods. How much they have not sold? 1/4. How much is the unrealized profit? 200. Is it right? Means how much is the profit they have? Unrealized profit. The unrealized profit is 50. How you got 50? Is it? How you got 50? See the thing. How much profit they got it? They got the profit of 200. Okay? They got the profit of 200. On 200, is it right? They have not sold 1/4 of the goods. Is it right? 1/4 of the goods have not been sold. That 1/4 of the goods we have to we have to take it out. Is it right? We have to take it out. How much we have to take it out? That's much. Fine. Now, if we are taking 1/4 of the goods are not sold, this is for the subsidiary. Is it right? This is for the subsidiary. Now, this is the total unrealized profit of the associate. Sorry, total unrealized profit of the associate. How much? 50. What is the parent company share in this? The parent company share is only 30%. Is it right? You put this as a, what I should mention here. We have to write something specifically here. Is it right? What we will do, we will root as a, we will write it, I will put one star mark, okay? I will put one star mark, okay? I will put one star mark so that it will be easy for us to understand. Is it right? From this 50, is it right? We have to reduce, that's very important. We have to reduce what? The share of parent in unrealized profit. Share of parent in unrealized profit is how much? 50 into 0.3. Is it right? 50 into 0.3. How much you will get? 15. Is it right? 50 into 50 is the total unrealized profit. Is it right? 50 is the total unrealized profit. Parent company share is how much? 30%. Is it right? Parent company share is how much? 30. That 30% we have to remove. That is the reason we are doing all these things. Is it right? That is the reason we are doing all these things. Is it right? Just revise this. If you have any issue, let me know. Okay? Any issue, let me know. How much you will get here? Now 7,500. Is that 7,500 plus 875, 1875. How much you'll get? 1 minute. 7,500 plus 1875, 1875. Okay, that is 1875. 1875 plus 300 minus 35 minus 15. It comes to how much? It comes to 9625. Okay, it comes to how much? 96. That's, see, understand though, see how much we have done so much and we got a small result. Is it right? We've done so much and we got very small result. Unrealized profit, okay, on the goods which has been is it, which has been unsold. Is it right? Now is it right? Fine. I'm taking, okay. Okay, now nothing is there. The major part is over. Okay, major part is almost done. Is it right? Major part is almost done. Now we have done this. Is it right? Now we'll take what? We'll take the working note 6. Is it right? Working note 6. Is it? Working note 6 is nothing but what? It talks about investments in associate. Investment in associate. What is the cost of investment? Cost of investment. How much is their cost of investment? Cost of investment is how much? Cost of investment. P acquired associate 750,000. Is it right? Cost of investment is how much? 750,000. Point number 2. Okay. Point number 2. Cost of investment is how much? Cost of investment is point number 2. How much? 750,000. Okay. 750,000. Next. Share of, is it right? Share of post acquisition profits. Is it right? Share of post acquisition profits. How much is the post acquisition profits? Post acquisition profits are how much of the of, is it right? See the thing. Share of post acquisition profits are how much? It is right. It is here. Is it right? It is here. Is it right? Share of post acquisition profits are how much? Working 5, 300. Is it right? Share of post acquisition profits are how much? Is it right? I will put 2 star marks. Okay, I will put star marks. How much? 300. I will put the same color for that. Okay, so that you should know from where we got it. Okay, from where you got it. Is it right? This is from where? This is from working 5. Okay, this is from where? This is from working 5. Is it right? Next we have done impairment. Is it right? How much is the impairment? 35,000. Point number 4. Is it right? Point minus impairment of investments. Impairment of investments. Point number 4. Point means additional information. Okay, point means how much? Means additional information. Next, is it right? Unrealized profit. Is it right? Unrealized profit. Okay, unrealized profit. From where we got unrealized profit? We got unrealized profit from the 5 only. Is it right? From the 5 only. Working note 5. How much? 15. Is it right? How much? 15. That's all. How much you will get here? 750, 1050, 1050 minus 50, it comes to how much? It comes to 1000. This is investments. Investments in associates. Is it right? Investments in associates. Okay, investment in associates. Fine. Okay, that's good. Inshallah khair. Inshallah, I hope we will get it that done slowly. Okay. Now the last one. Okay, last one. Consolidation. Consolidated balance sheet, financial position, consolidated statement of financial position. No, don't write like this. Okay, don't like this. Consolidated. Otherwise, we'll get the same. Consolidated statement of financial position. Financial position as on 30th September 2008. Okay, 30th September 2008. I'm doing little bit slowly. Okay, not slowly. I want to give as much clarification as possible. That's the only thing. Okay, amount now. Okay, next. Next. Okay, now first one by one we'll take what? First you take good non-current assets. Is it right? Non-current assets. We have calculated goodwill. How much is the goodwill? How much is the goodwill? Goodwill, how much we have calculated? 2600. Is it right? How much we have calculated goodwill? 2600. Next, property, plant and equipment. Is it right? Property, plant and equipment. How much is the property, plant and equipment? 34,000. 14,000 plus 7,500. Will not take 14. Will not take for associate. Okay, will not take for associate. 7,500. It comes to how much? 21,500. Is it 21,500? Next, investments. Is it right? Investments. Investments. How much is the investments? How much is the investments? Investment is 10,000. Is it right? Minus investments of 5,000. Minus investments in A. Investment is how much? Investment is 10,000. 10,000. Investment is how much? Investment is 10,000. Is it right? 10,000. Of these 10,000, how much is the investment in subsidiary? Investment in subsidiary is paying 5 million. Is it right? They have taken 5 million in cash. And how much they have paid? Yes, they have paid 750 in cash. Is it right? Fine. Is that 1 minute? Is that investments? Investments is how much? Investment is 10,000. Okay. Minus subsidiary. Is it right? Minus subsidiary. How much is the subsidiary investment? Subsidiary, they have paid cash. Is it right? They have paid cash. Point number 1, point number 2. Okay, point number 1, point number 2. Is it right? This is point number 1. Okay, this is point number 1. Cash. Is it right? Next, associate. Okay, associate, point number 2. Is it right? How much associate? 750 in thousands. Okay, 750 in thousands. How much is there? If you remove that, it comes to how much? 4,250. Is it right? 4,250. Next, we have done investments in associate. Is it right? Investment in associates. Where we have done investment in associates? Investments in associates. Here we have done working note 6. Is it right? Working note 6. Investment in associate, working note 6. How much? 1,000. Here you write 4,250. Is it right? Here you write 4,250. Fine. Next. current assets. Next, current assets. How much is the current assets? How much is the current assets? Current assets are 7,500. How much is the current assets? 6,000 and 3,000. Okay, 6,000 and 3,000. and 3,000. Here, how much is the current assets? 6,000 is the parent company, 3,000 is the subsidiary company, 9,000. Okay, total it how much you will get? Total assets. Total assets. How much you will get? 2,600. Here 2,600, 21,500, 4,250, 10,000. How much you'll get? How much? Are you here? 38. Thank you so much. 38, 350. Is it 38, 350? Fine. Slowly, we inshallah done equity and liabilities. Equity and liabilities. Okay. Share capital. Only parent company. Okay. Only parent company here. Share capital. How much is the share capital? 10,000. Okay. Group retained earnings. Is it right? Group retained earnings. Group retained earnings. Working 5. Automatically working 5. Okay. 9625. 9625. NCI. Working 4. Is it right? NCI working 4. 2225. Okay. Where we have done working 4. 2225. Okay. Fine. How much you'll get? This is the total. 0,151,9 5, 5, 10, 1, 5, 1. This is 8. This is 8. Is it right? This is 8. 21,850. Okay, 21,850. Now, $21,850. Okay, non-current liabilities 8,000, 1,250. Current liabilities 4,500, 2,750. Is it right? Non-current liabilities are how much? Non-current liabilities. Non-current liabilities. Just write down. Nothing will happen. 8,000 plus 1,250. Just you are writing this also. It will give marks. Okay. I'm stressing again and again. Just you are totaling it, they will give half mark. They will give marks. Is it right? Current liabilities. Current liabilities 4,500 plus 2,750. Okay. 7,250. 7,250. Total how much you'll get? 0, 5, 5, 5, 15, 1, 1, 13, 1, 18, 1, 3, 8, 350. Alhamdulillah.